Hello, welcome to the Learning to Conquer the Forex Market course with Trader Kenneth. So this is a mini course, and what does this mean? This means that this video is just aimed to get you to understand what you are getting into when it comes to the Forex market and when it comes to the Learning to Conquer the Forex Market course. Okay, so this video is just going to be around 20 to 30 minutes, and what you'll be getting is just you being introduced to that atmosphere of the forex market, you being initiated, just getting to know what you are coming into. And if you're someone that has already know what the forex market is all about, I assure you, you'll surely learn something new from this video. Okay, so just stay with me till the very end. Now, the first thing we're going to learn, as usual, is the basic terminologies and concepts, like the definitions, the basic things you need to know and all that. All right, so we are starting with what forex is. Now, forex is simply a short form for foreign exchange. It is the exchange of one currency for another. Okay, so locally, when we go to the bank to exchange one currency for another, we just partook a foreign exchange. So if you go to the bank right now and you exchange, let's say naira to dollar, you just partook in foreign exchange. If you exchange your pound to dollar, you just partook in foreign exchange. Okay, but that's locally. Okay, so now, but digitally, which is the way we are going into, which is the way you are going to go into. Okay, we trade forex by using a certain mobile application. That means the forex market can be minimized all the way to the palm of our hands. Okay, so that's how big technology has become. Okay, so now we gain access to these forex markets by what we call forex brokers. So these forex brokers are simply the bridge between someone like you and I and the forex market, because in the olden days this wasn't possible. Before you can even trade forex, you need to be a big bank, or you need to be a big company, or you need to be a hedge fund manager, something like that, and you need to trade with a whole load of money. If you don't have at least let's say $100,000 to $1 million, you can't even trade the forex market. But right now you can even fund as little as $10 into a broker account and start trading with that $10. Okay, so now that's just how big technology has become, and these forex brokers are one of the best things to have ever come into the forex market as a whole. Now, these platforms, which is these brokers, they give us the opportunity to create an account with them, verify our identity, and then deposit any amount of money you want to deposit using any of the funding methods available. Now, these brokers are just websites. So when you just go to any of the websites, the one you choose, although I have a recommended broker, so after you take the course, I'll surely give you the link to register with that recommended broker. The broker has all the facilities and all the things you need in order to have a good trading experience. Okay, so now what you do is that this platform, okay, it will give you the opportunity to create an account with them, like I said. Then you verify your identity and then deposit any amount of money you want to deposit. Now, once you have deposited, you will now be given a set of login details that you now impute into a mobile application called the MetaTrader 4. All right, so we're going to see the MetaTrader 4 real soon. Now, the next thing we're going to be learning is currencies and currency pairs. So, like I said before, we trade currencies on the forex markets. Okay, but the local way is just to go to the bank, tell them you want to buy one of the currencies. Let's say you have naira, you just go to the bank. Okay, yeah, I want to buy dollar. Then you just go over there, you pay them the naira, they give the dollar based on the current exchange rates. Okay, so now we trade currencies on the forex markets, but these currencies are in form of pairs, that's digitally. And we're going to see that real soon. Now, let's just see some examples of currencies. So currencies can be categorized differently, but these are some examples. We have the euros, we have the GBP or the Great Britain pound, we have the US dollar, we have the Japanese yen, we have the Canadian dollar, we have the Australian dollar, we have the New Zealand dollar, and so on and so forth. Now, two currencies are paired together. Okay, on this mobile application that I'm telling you about. Two currencies will be paired together and their exchange rates will be presented as one price on a chart. Now, that's just how it looks, and we're going to see that right away. Now, we're looking at MetaTrader 4 now. So this MetaTrader 4 is the application that is used to trade the forex market. Okay, so now let's look at the MetaTrader 4. Alright, so this is the MetaTrader 4 app, and what do you see here? The first thing we are seeing here is what we call EUR USD. That's the most popular currency pair on the market. EUR/USD is the combination of the euro and the US dollar. The next one we have is the GBP/USD. The GBP/USD is the combination of the Great Britain pound and the US dollar. Okay, you can see that they are combined as one pair. And then what you see by the right hand side, you see different prices and things that are looking confusing for now. But believe you me, you understand it as time goes on. All right. Now the EUR/USD. Let's look at it. Let's click here, open charts. So now this is the chart. This is a typical forex chart, and this is what we call the EUR/USD chart. Now this price you are seeing by the right hand side, let me mark it. So this price you are seeing by the right hand side, right now it is 1.01587. It's changing every second. So you can see the reason why exchange rates change by the day, exchange rate changes by the minutes, by the hour. It just depends on what's happening on the market for that day. Okay, so now the current exchange rate of €1 to $1 is 1.01611. It's changed right now. Okay, but just know that this chart is simply the exchange rate of euro to dollar. So if you go to the bank right now, this will be the exchange rate. Okay, but right now, you being a forex trader, you have the ability to take advantage of the upward and downward movement of this chart. You trading it digitally, and you have the ability to trade it and possibly make money from just by clicking a buy or sell. Okay, so now right now we're going to go back to our text page, and we're going to discuss some things relating to this MetaTrader 4 app. So now we are going to pips, lot size, and dollar relationship. Now these words are new words. Let's say if you're a newbie, if you've not said anything about forex before, so these words may look confusing to you, but we are just going to take them step by step. All right, so now a pip is the change in price of any currency pair. Okay, this is any. So it is a change in price of any currency pair. So they are calculated in 3 different ways depending on the pair, but we are not going to be looking at that for now. It's a complex calculation. All right, so now pip is the change in price of any currency pair. Now what do I mean? Now for example, let's look at our local currency, the naira. So let's say 2,000 naira. Someone gives you 2,000 naira, or let's say you want to pay for let's say 100 naira stuff, and then you give the person 1,000. Now the person gives you 900 naira change. Okay, so now 1,000 minus 900 is what? 100 naira. So that means 100 naira is the change in price of that transaction, right? So when you now you guys are finished doing it, you've gotten your product, the person has gotten his money, the person also gave you change. So that 100 naira is the change in price for that 1,000 and that 900. Okay, so now we can call that 100 naira a pip. So that 100 naira is the slight difference between these two transactions. Okay, but then remember we are talking about just the naira. So but then we can't call the 100 naira pips. You can see we are calling it 100 naira because it is still naira. But now you'll be asking yourself, what if two currencies are paired together and want to find the difference between their exchange rates? Let's say, for example, that euro/USD that we saw. Let's say we want to find the difference between one price that's at the top and one price below. Okay, so whatever you get after minusing those two is what we now call a pip. All right, so that pip is what determines how much we can we can make from the price movement of any chart. Okay, so now we'll be learning more on that as time goes on. Now the second thing we'll be looking at is lot size. Now the lot size is simply the amount of any currency pair we are buying or selling. Then just change this to trading. Any currency pair we are trading. All right, so lot size is the amount of any currency pair we are trading. The higher the lot size, the more money involved in trading, and the lower the lot size, the lesser money involved in trading. So there are 3 types. We have micro, mini, and standard lot size. So to explain this better, let's go back to our MetaTrader 4 app and check it right away. All right, so we are back to our MetaTrader 4 app. Okay, let's look at the chart right now. Now, this is what I was explaining about a pip. So let's look at this price. So this is 1.02160. And let's look at this other price, 1.02030. Now, when you minus the both of them, you're going to get like, let's say, I'm using my head right now, you're going to get 0.00130. That's what you're going to get. Okay. Now, right now in Forex, that's what we call 13 pips. Now, don't think about it so much because it might be really confusing, but that I'm just trying to show you right now that the difference between any two prices on the chart, let's say from this one to this one or from this one to this one, just know that whatever he gets is what we just call pips. So that's the first thing you need to know. Now, the second thing we are going to be treating right now, okay, because this is a demo account, I just created it for the sake of this mini course. So this is a demo account. The demo account is fake money. So demo, this is my name. So this demo account right now, so this demo account right now has a total of 3,000 USD. Okay, so this is the dollar that we are making right now, or this is the dollar that is available, that is funded in this account. Now, if we want to enter a trade, let's say this is Euro USD. Okay, and let's just say we want to buy. So what do? You click. I'm going to click here right now because this is the place to start a trade. There are different ways to start a trade. You can even go to the Euro USD and click on New Order. Now, once you do that, we have different trading orders, but right now we are on instant execution. Now, this is what we call the lot size. The lot size are these figures that are here. Now, 0.01 is the least lot size, which we call a micro lot size. Now, what does that mean? Let's look at what will happen right now. We click on buy. Now, what do you see? We are making $0 right now. We are losing $0.12. We are losing 15 cents. It's changing. As the price is changing right here, our profit or loss is changing. Right now, we are on profit of 11 cents, 20 cents. Now, what am I trying to show you? I'm just trying to show you right now that just look at what we are making. And then let's look at when we will change the lot size. Now, this is 0.01. Now, let's change it to 0.10. This is now what we call a mini lot. Now let's click on that same buy. Now let's look. You can now see that when I open this one that had a bigger lot size, I'm now losing $1. I'm losing $1.5. I'm losing more than what I was losing when this price was here, right? So this is just to show you that when it comes to lot size determines how much you can lose or make on the forex market. So the larger the lot size, okay, the more money that is involved in our trading. Now, that's not all. We have one more that is called the standard lot size, and that is 1.00. Once you click on buy, you'll now see right now we are losing $8, losing $6. It's now bigger than these other two positions. Why? Because it is a larger lot size. Now, it's not only in the figure of 1 that we can open these lot sizes. You can open even as little. You can open the list is 0.01. You can't open anything less than 0.0, but you can open something like 0.07. 0.07. You can open something like, let's check, 0.12. You can open any figure as long as it's above 0.01. You can even open as high as, although it depends on the equity, you can even open as high as 10.00. Okay, it's not enough for so that's one thing about trading. It depends on your capital. It depends on this here right now, the balance and the equity. Right now we are using $3,000. So if I open with 10.0, which is a very larger lot size than even 1.0, it's too large that the market can't take it up. Plus I will open so many positions. So right now, if I open it, it won't be possible because the equity is too low. Now you can now see that these ones that I open with larger lot size are making more money or losing more money than these ones that are lower lot sizes. Okay, so that's just how these lot sizes work. So I'm just using this as an example. It's not good to open so many trades. As you learn your forex, you understand better. Okay, and this lot sizes, you can't just open anyone. It all depends on a certain calculation, which I won't be able to touch for now. Right. So right here, what we are just doing is to understand the relationship between the pips, the dollars, and the lot size. They all have a relationship. These three: the pip, the lot size, and the dollar. Why do I say the pip has a relationship with it? Because this thing now, you remember price was here before. Price was at this downside for when I bought, and now it's going up. Okay, so now the difference between this price that I bought, this price that I bought, and the price that that the market is right now, right, is what we now call the pips. So the difference between these pips is because of these pips that the market was not able to calculate how much I'll be making on this trade. Right now, in the total, I'm making $35. Now, trading is not this easy. Right now, I just did a kind of mini analysis with my eyes. I knew that this market will most likely buy from here, but it's not that easy. And as time goes on, you will now understand the different reasons or the different methods you take in order to start making money from the forex market, or in order to just start trading the forex market. So let's close all our positions. We are making profits, but let's close them. See, you can see that the one with 1.0 is making the most profits. Why? Because it's a standard lot size. So this is just what you need to understand about the pip, the dollar, and the lot size relationship. So let's go back to our textbook. Now, the next thing we'll be discussing is how price moves on the forex market. So you saw on the chart that price was moving. Okay, you can see how the euro-USD was moving. And one thing about the forex market is that it's opened 24/5. What does that mean? It's open from Monday to Friday. It's not open on the weekends. Why? Because no transactional activities happen on the weekends for countries, basically. Okay, and we trade the currencies of other countries. So as you know, the banks are not open on Saturday and Sunday. Banks are only open from 8 a.m. to 5 p.m. from Mondays to Fridays. Some open 8 a.m. to 4 p.m. 4 p.m. Yeah, so it all depends. Okay, so the same way you know that in your country, transactional activities just happen from Monday to Friday, 8 a.m. to 5 p.m. It's the same way every other country has such things. Okay, so when these countries are transacting, when they are exchanging one currency for another, due to this reason, price is just moving. Okay, so right here I wrote that price moves based on the law of demand and supply, and the law of demand and supply states that when a certain asset or when a certain product is demanded by more people, the price is likely to increase. Okay, why? Because there are more people asking for that product, and due to that reason, the price will increase. Now, but when lesser people are interested in that product, let's say even people are running away from the product, the price will reduce. Why? Because it's reducing the price, trying to attract more people to come and purchase it. Okay, so now no one likes a reduced price and all of that. Everyone likes a price to be increased, but the only way to attract people, when you see lesser people coming for your product, is by reducing the price. That's just the local concept behind it. But then in the terms of the forex market, when more people are putting money into a certain currency, when more people are entrusting their money into a certain currency, then that currency is likely to increase in price. So you may not be wondering, how was euro-USD moving? Why was he moving down for some time? Why was it moving up for some time? And be asking questions like that. It's simply because of the transactional activities of countries and banks all over the world, moving money from one place to another. The money that is flowing within the forex market, the digital money that we can't see, that is just flowing within that forex market, is what we call liquidity. So in total, this is what I meant by saying that the forex market is a $6.6 trillion market, meaning that on a daily basis, the liquidity, that is the amount of money flowing within the forex market, going in and out, is a total of $6.6 trillion. That is huge. Okay, so this $6.6 trillion is a combination of all the money from every single bank, every single company, every single country, every single person doing transactions, here and there. So the forex market is that big, and that is why it's never too much for anybody. Anybody can still come, even though in 10 years from now, even though everyone in Nigeria starts trading forex and we are all making money, the $6.6 trillion will never finish. So that's just how big the forex market is. So right now we're going to go on to the next stage, which is the forms of trading. So we just crossed the basics. Okay, so right now we're going to look at the forms of trading, which is the analytical part of trading, basically. So the analytical part of trading sees you learning the forms of trading, and these forms of trading are simply the basic foundations you need in order to conquer the forex market. Now, just like I said before, that these particular forms of trading, a trader must have used at least one or two of them in order to make his decision for trading. So if you see any trader that, let's say, he bought or he sold a certain currency pair and he's making profits, and you be asking him, how did you know it to buy from here? How did you know it to go up from here? How did you know it to go down from here? It's simple. You must have applied one of these forms of trading in order to make his decision, and you know what these forms of trading right now are. Alright, so first things first, it all starts from understanding how all these forms of trading work hand in hand to complement one another when it comes to trading. So they are the first one, fundamental analysis. So this is the form of trading that deals with analyzing the forex market and making your trading decisions based on news updates and financial metrics that are released by the government of any country. So when the news of any country released, the currency situated with that country sees quick movements in a short period of time. So these quick movements are called volatility of price. So when price has high volatility, it means that it's moving faster. But the euro-USD, if you notice, it's also really moving fast, so we will say it has low volatility at that point in time. But I'm going to show you right now something on the Euro USD charts, or what I mean by what this fundamental analysis can do. So this fundamental analysis, when any news updates, a high impact news, because some news are just small news, they can't really move the market so much, but high impact news, they move the market, and the market moves so fast. Okay, so when the market moves so fast, these traders that know how to trade fundamentally, will now take advantage of these movements and make money from it, provided they know how to analyze fundamentally. So we can get news from forexfactory.com. We'll go there right now, but before then, let me show you something on the Euro USD charts. So this is the Euro USD charts, and something happened yesterday. So look at this. Price was buying. This is what we call buying, but going up, and then it sold a bit. Now imagine this. Look at this long price movement now, how it just went up, boom, and then came down again. What happened was that yesterday, because this thing happened yesterday, a particular news release was made, a high impact news release, and due to that reason, price became highly volatile, very fast, and then it just went up, boom and bam. So that's just how this news can affect the forex market. So as a technical analyst, as a fundamental analyst, okay, you'll be able to know when this high impact news wants to affect the market, and then you just try to take advantage of it. So let's go back to our book. So right now, let's click on the forexfactory.com link and then check out the websites. So this is the Forex Factory website, and it's a very popular website for getting news updates. Now, as a fundamental analyst, you know how to read this particular metric that you are seeing right here. So you are seeing a lot of things, and this particular news updates that are coming are for the euro. So that means pairs like Euro USD and other pairs associated with euro will surely move quickly. And then this red mark is simply showing that it's going to be a high impact news. So on this forexfactory.com, you see, okay, yeah, this is the different news updates that are coming. This is what people this is what happened, or this is what was reported, and sometimes you see what people are expecting. So this fundamental analysis will see you learning how to read all these financial metrics or reports and be able to apply it on the forex market, or make your trading decisions on the forex market. And with that way, if you are if you got it right, you're going to make some money. But if it didn't go the way you planned, you're likely to lose your money. Okay, so the best thing is to learn how to do it properly. So let's go back to our book. So right now we are going to be looking at the next form of trading called sentimental analysis. Now sometimes the sentimental analysis is not really used a lot. Most times it's just once in a while people use it. So it's the least used form of trading. But this form of trading deals with analyzing the forex market and making your trading decisions based on the decision of the bigger players in the forex market. So these players include hedge funds, big banks, and large companies. They are the ones who do the major exchange of foreign funds, both locally and digitally. Now, this activity that they do is what makes the markets have so much liquidity, which we understood was money, to go around. Okay, so the activities are now made public and published on what we call the COT report. So we are going to look at the COT reports very soon, but what you need to understand about the sentimental analysis is that these big players, they are the ones that move price. They are the reasons why price move the way they move. They are the ones that have so much money. Out of that $6.6 trillion, they have billions embedded within it. So they are the ones that invest their billions, move their money from here to here, and due to that movement of their money from here to here, either digitally or locally, this process or this activity is now what makes price to move from one place to another. So if they are not involved in the market, price will most likely be stagnant, and that's why during the weekend the forex market is closed. You see that those price movements you are seeing on the charts, they won't even be moving. Everything will just pause. Why? Because the activities of these big players during the weekend are also paused, so everything is just on hold. Okay, so now let's look at the COT report and understand what I'm saying about this. So right now, all these are looking like jargons, and I will advise you not to really put so much attention on it. But this is just to show you that these are the metrics that are always reported every single week, showing us what the big players are doing in the market. Right now we are on the US dollar index. That means that they are showing us the amount of people that bought dollar from last week to this week, and the amount of people that sold it. So from these metrics, or from this information we are getting, we can now make our decisions and say, okay, since the bigger players are investing more in the US dollar, then I will be buying the USD. But that does not mean you just open your chart to buy the USD. That now brings us to the last form of trading, which we call technical analysis. So technical analysis is the form of trading that deals with analyzing the forex market using several tools and objects provided on any charting platform. Now, the MetaTrader 4 has these tools and objects, but I won't advise us to use the MetaTrader 4 to be analyzing technically. And you will know the reason soon enough. Okay, so now the most popular charting platform, TradingView, has a variety of objects that can help you analyze the market technically. Now, this form of trading is the most used form of trading, and it sees one studying historical price movements so as to make decisions for possible future price movements. Now, this is due to the fact that the market moves in cycles, and what has happened before will always happen again. So, as a technical analyst, you study and experience all these movements so as to make better trading decisions. Okay, so now what technical analysis does is that it helps you study historical price movements using different tools and objects, and we are going to go to the TradingView app soon enough. Okay, so now when you look at the price, the past price movements, you see what price did in the past. You take out your objects, you see lines, rectangles and all of that. You take them out, mark out all those areas that price used to move, and then you notice that when price in the future, when price comes back to those areas that you drew out, it will most likely react to those areas, causing more movements in a certain direction. Okay, so now let's open our TradingView app and see what I'm talking about. So this is my TradingView app. Okay, and I can see these are all those pairs we saw on my MetaTrader 4 app, and even more. There are more pairs. Okay, so now these pairs, let's look at, let's say, AUD card. Okay, now AUD card is the combination of, you can see it here, it's written right here, the Australian dollar and the Canadian dollar paired together. So now let's look at them on a larger scale and see what I'm talking about this object. So you can see this is a line, and it was me that marked out this line. Now the TradingView app is quite complex if you do not know how to use it, but with time you surely understand how to use the app. There's a whole video dedicated to how to use TradingView interface. So right now, this is what I mean. Now look at this. This happened, the TradingView will allow you to be able to date back all the way to even the 90s. You'll be able to see what happened to price even as far back as 1990 and all of that. Okay, so that's one thing about the forex market. You see a lot of things from the past. So let's look at this now. Now, this is what I call the studying of historical price movements using technical analysis. Now, with technical analysis, I was able to know that because price moved up from these points, okay, price moved up from this point. You can see that it moved up, immediately it reached this area, this point. Okay, now due to that reason, I drew out a horizontal line, and then I was able to now know that when price was now coming back down, I was now able to know that when price reaches this line, it's most likely going to bounce up. Okay, I didn't know how long it will bounce up, but it's most likely bounce up. So what did I do? Immediately price reached this area, I now bought, and what do you notice? I made some money because I was right and price moved up from that area. So let me draw it out. So price moved up from that area, and I can't remember how much I really made, but this is just what technical analysis is trying to show you. So let's even go back all the way to, you can now see what we call studying of historical price movements. Now going back all the way to, this is 2021. Let's even go back all the way to, let me show you, see, going all the way back to 2005. This is what price did in 2005. So this is what TradingView can do for you. MetaTrader 4 can do it for you. So that's why I said it's more advisable to use TradingView to analyze the charts using technical analysis. MetaTrader 4 won't be enough for you. Okay, so now let's go back to our textbook, and then we'll conclude the class. So in conclusion, these are just the 3 forms of trading you need in order to conquer the forex market. No two ways about it. It's either you use these forms of trading or you don't use it. And when you don't use them, you are likely to get burnt and wrecked in the forex market. Okay. So now finally, we are going to go to the final part of this mini course. So under the final parts, we have money management and psychology. Okay, so we looked at the analytics, we looked at the basics, the terminologies and concepts, we looked at the analytics, and now we are looking at money management and psychology. So one thing about trading is that it's not just by learning the forms of trading. I said the forms of trading are what helps you conquer the forex market. That is correct. But that's not where it ends. Forex market is a combination of a lot of things. The analytics, the money management, and the psychology. And now let's look at risk management. Now, risk management is the act of managing your money on the forex market so as not to lose it all. Remember, I said you're the one that deposits money into your broker, so it is your own choice to deposit how much you want to deposit. Okay, most brokers allow you to deposit a minimum of $10. And you can only deposit with your local currency, and then they'll convert it to dollars for you, because you can see on my MetaTrader 4 app, it's only dollars we can trade with. Some allow you to trade with any other currency of your choice, but it's best to trade it with dollars so that you'll be able to understand whatever calculation that has to do with pips and lot size. All right. So now, this risk management is that skill you need to know in order to know how to manage your money on the forex market. No matter how much you fund, even those are little as $10, the moment you learn risk management and you practice it properly and you implement it the right way, you'll be able to manage that $10 on the market to the extent that you won't even lose it all, even if you go into a bad trade. So there's something we call a stop loss. So a stop loss is simply is on that MetaTrader 4. Okay, so there's a place you can set a stop loss price. That means that whenever price is going against you, okay, and then market touches that stop loss price, your trade will close in a loss, but that loss will be a small loss, a loss that you've accepted from the very beginning. So this risk management is just the ability for you to know that risk you want to be taking on every single trade you are taking. Okay, that risk you want to be taking, because in trading, no risk, no reward. If you're not willing to risk anything on the market, then there's no need for you to want to come and make money. So you should be willing to risk something, and that is that stop loss that help you know what to risk. So now, when you now put that stop loss and then price goes against you and then it hits, all right, you'll just make a little loss. But with the right knowledge, with the right skill, with sufficient knowledge and knowing the best things to learn from the forex market, okay, you'll be able to make more money when you later go into profits. What do I mean? With this risk management, okay, you will just make small losses. And whenever you make profits, they'll be larger than those losses, okay, and then they'll cover up for those losses you made and even make you more money than that, okay. So that's the power of risk management. Now, it is what differentiates trading from gambling. Okay, so now there are different strategies and calculations to apply in order to get the best of risk management, but you won't be getting them here. You'll be getting them on the full course of the Learning to Conquer the Forex Market by Trader Kenneth. Okay, so now the next thing we'll be looking at is trading plan. Now, trading plan is something that is very important. In fact, in any business, if you fail to plan, then you plan to fail. Now, but in trading, you need to plan your trade and trade your plan. What does that mean? Before you go into a trade, plan what you are going to do when that trade plays out. Plan what you're going to do when that trade doesn't play out. There are different factors to look at when trading. Okay, but the main thing is to plan your trade. And the moment the trade now comes into play, when it's time to now go into the trade to buy or sell, trade your plan. Whatever you plan to do, do it. Be self-disciplined to do it. That's where psychology comes in. Be self-disciplined to do it. Don't just say, okay, yeah, I know I said this, but let me just do another thing. That is where gambling comes into play. And that is where people start losing their money. And then you start hearing things like, Forex didn't work for me, but it's working for others. What am I doing wrong? See, this is just a simple path. You are not doing this the right way. You're either not managing your risk properly, or you either didn't get enough knowledge on the analytics, or your psychology is not good enough, or you're not disciplined enough to follow your plan. That's just one thing about traders, okay? Is one of these factors that make them lose their money. Because me too, I lose, but my losses, like I said, are managed properly. And even when I lose up to 5 trades in a row, okay, the next time I make profits, that profit will be able to cover for all those losses. Why? Because of my risk management strategy, my sufficient knowledge on risk management. Okay, now, even though I lose 5 trades in a row and I have not still made losses, and I have not still made profits, what do? I just relax a bit, come back the next week and try to trade again. Because I still believe in my strategy. My strategy has always worked for me, and I'll be disciplined enough to still follow that strategy to the very end. And that's one thing about trading. If you're not self-disciplined enough to stick to your strategy, you most likely lose more money than you were meant to lose from the very beginning. Okay, so trading plan sees you following your plan in a self-disciplined manner, without deviating from it, without changing your mind, without making impulsive wrong decisions. Okay, so now the last thing we're looking at is trading psychology. Now, it is said that trading is 10% analytics, 10% money management, and 80% psychology. You've learned trading, okay? You've learned it. Now, the next thing is now, go and trade with your real money. some people, will make so much money on demo trading because it's not their money, it's fake money. So they'll just trade without even thinking too much. Their heart will not be beating, they'll be so relaxed. But once they found their money, to just press the buy or sell button, voila, they'll start becoming afraid, sweating. Now, this is where psychology comes into play. You need to relax. And one thing about this trading psychology is that no matter how much a tutor teaches you, you will still feel it, because all of us are humans. I still feel, a little bit of psychology issues when I trade, but they are controlled, and that's where you need to now control your emotions. Now, your tutor will never be able to help you control your emotions. Like he won't be with you. He's not inside you to say, okay, control your emotions. Just relax. No. It is still you that has to do it. And that is one thing you need to know about trading, that it's not everything your tutor can teach you. There are some things you need to experience yourself in order to get over them. Experience that fear, experience that anxiety, experience that joy, experience that greed, so that you can be able to overcome those things you always do to lose your money, and then you'll be able to tackle the market the right way. Okay, so now trading psychology sees you learning how to control your emotions, learning how to take better trades based on your mindset and all of that. Okay, so now this is every single thing that the learning to conquer the forex market will treat properly from the very beginning to the end. This is just a mini course, and if you notice, it just took us about this is 35 minutes. Okay, so it is nothing compared to how large of a knowledge you're going to get from the learning to conquer the forex market course. So the learning to conquer the forex market course is a total of 22 videos, and you'll be learning every single thing there. So what I'm going to do right now is that we're going to go to the course area, and then you're going to see what you'll be getting from the learning to conquer the forex market course. Alright, so this is the learning to conquer the forex market course area. Okay, so when you purchase the course, when you sign up, you'll be sent a mail regarding your login details. So when you now get your login details, you now get to this page. Now, as you can see, you have a total of 22 videos, and there are some PDFs also embedded within this whole course area. So first of all, this is the first thing you see, learning to conquer the forex market with Trader Connect, and then you see what you're going to learn. So right here, I said the learning to conquer the forex market course is a powerful beginner to advanced, easy to digest, valuable course that will guide you on the proper methods to apply in order to conquer the forex market. These are the methods that I have applied, and they made me conquer the forex market. I am profitable on the market, and I've made about 10 to 15 million from trading the forex market alone. Now, I'll take you on a step-by-step journey, teaching you how to trade the forex market properly, effectively, and most importantly, profitable. So if you're ready, click the open button and let's get to it. So let's click the open button. Now, when you click the open button, to take it to your course area, so what do you see? This is the intro. You get a video, 7-minute video of me introducing you to the outline. So let's play it and see.
Hello.
So you can see how this is good. This is good. This is really, really good. So now, right here, you can see a button that you click if you want to join the Telegram community. And when you're done, you just mark as complete, and it goes over to the next one. Now, the next one is basic terminologies and concepts 1. Now, if you play it you get what you are meant to get. You mark as complete. You go over to the next one. When you are done, now let's click on this menu button. You click at this. This is where I clicked. So you see every single thing you're going to be getting. So let's look at this. You're welcome. The intro video. Basic terminologies and concepts 1 and 2. Advanced terminologies and concepts 1, 2. MetaTrader 4 interface. You learn all these videos. They are very simplified and very valuable, and they have so much value within them. So we have plot size and dollar relationship. This one is going to thoroughly explain all these concepts we just learned under 30 minutes. You're going to get them broadened properly. Okay, now we also get fundamental analysis 1 and 2, sentimental analysis 1, another terminology called correlation on the forex market, very important strategy, technical analysis, the basic concepts, technical analysis, the advanced concepts, and then we finally get psychology drills, where you now get to learn risk management, trading plan and psychology, and the final psychology drills. So tell me why you won't get the learning to conquer the forex market course. This is everything you need. This is sufficient knowledge. That's sufficient knowledge you've been seeking. This is everything you need in order to conquer the forex market. So if you're ready to get to it, just click the button that's you've been provided with, click the link you've been provided with, and then get over to the page to purchase the course. Will I see you soon? We'll see that.